Good morning, traders. This is Brad Matheny. Today is April 8th, Saturday, early in the morning. This is the custom gold and metals video for everybody to understand what's taking place in metals. I've been very clear about metals and pointing in the right direction. Hopefully, you've all been able to profit from this. The markets have entered a new phase. They're really entering into a phase which is very similar to 2003, 2004, like I've been saying for months. We've got a little bit of fear going on, and if you can remember back to 2003, 2004, if you're old enough, we had just gone through a 9/11 terrorist attack, the busting of the dot-com bubble, and there was a period of time back then when we didn't know what was going to go on. We didn't know how the markets were going to settle after such a massive disruption. And it prompted a very early phase bias move in metals while the markets attempted to bottom in 2002, 3, and 4. And that's what I see is actually taking place right now in the U.S. markets and the global markets. We've had this massive disruption with COVID. In fact, let me come over here to the chart. This is a gold weekly chart. We had a massive disruption with COVID that took place right here. So you can see we had this ramp up going on in metals before COVID. So this was a period of time, 2017, 18, 19, where we saw this base and we saw this ramp up in metals. And likely this was due to global demand for precious metals. The economy was hot, but there was some activity going on here. Remember with President Trump and the Chinese with tariffs and other factors that were taking place. This was kind of an unraveling phase, let's say, in the global markets with what was going on. And this creates a scenario where actual demand for precious metals as a safe haven escalated. When COVID hit, this was a disruption in the market. So understand that we rotated here after COVID. Then there was an immediate demand because nobody knew what was going to happen with the markets, how we were going to recover, and what was actually going to take place. People were expecting crisis events, business failures, which did happen. If it wasn't for the Fed and the free money and everything else, this trend may have continued quite a bit longer. But by August, September, we had reached a peak. This was excessive speculative fear in gold. We kind of moved into this time frame, late 2020. We started getting news of the vaccines and started opening back up, and that created this downward cycle phase for metals. Now, we've broken out of this downward trend right now. You can see we're moving higher here, but I need you to understand that we are in a phase that may move us into kind of a sideways trend. Now, I'd drawn these lines a while ago saying that gold will get up to this level and attempt to retrace. I still believe that to be the case, but I need to let you know that gold may actually target a lower level unless we get some sort of a blow off, maybe 2100, maybe right in this area, to try to find some sort of a peak, and I'm going to show you why. Silver may rally a bit extended as this moves up into these new high territories, but somewhere up in this area, ladies and gentlemen, we're looking at a potential peaking area for gold, and it will likely be coming sooner rather than later, meaning we probably have another 4 or 5 weeks, maybe, of a rally in gold before we're going to find some sort of a resistance area and stall back out. And I'm going to show you this here in a bit. But understand that this is the beginning of the move. This is really just the start of the next phase, which will last 4 or 5 years. If I could contract this and try to show you what's really happening, we are likely going to be moving into a period like I've drawn here, up into the 2800, maybe a little higher. I'll try to draw it up here. Then we'll stall out a bit, and then we'll move up, and then by 2029, 30, we move into the parabolic move, okay? So we have some real opportunity here in gold, But understand, you will likely get another chance here to try to get it back below 2,000, maybe on a deeper pullback in this area. But after, let's call it December, January, February, December 2023, January, February, March 2024, I believe this area right here is going to be our opportunity to, let's see here. Oop. That's going to be our opportunity, folks. That's where we're going to want to get in. That's where we're going to want to look to buy and accumulate gold, right in this area right here. Right now, we're looking at, if you were to chase it, you're probably going to see maybe gains for 3 or 4 weeks, and then you're going to see a rollover, and you're going to be able to buy it actually possibly a bit lower come June, July, August, September 2023. Okay, so let's get over to the charts and really talk about what's going on. So this is the accumulation cycle phase index for the S&P 500. We were talking about this over the week, saying that we needed to see a downward trend here in the accumulation cycle phase to be able to actually see the S&P 500 build some upward momentum. We are getting downward trending now. Okay, this is a monthly chart. We are getting downward trending for March. April's going to come in and it's going to show us what's going on, but we really need to see this move slightly downward, which is going to cause the S&P 500 to move higher. Remember, I expect the S&P 500 to target 420, 425, maybe 430 before it peaks out and rolls over a little bit. And watch my investor video to understand how the markets are going to move longer term. We are building a base, but the base is not going to be very advantageous for us until basically July, August of 2023 or March, April, May of 2024. And that's when we have some real opportunity for future growth. And I've explained this many, many times, but understand that we are in a rotational basing period that's going to last 16, 18 months until we get through the 2024 elections. And leading up to the elections, maybe in March, April, May, June, we might have some really great opportunity. We'll see. The consumer engagement index is collapsing again. This is telling us that consumers are pulling away from the markets. They're still fearful, particularly of the banking collapse, particularly of real estate, and particularly of the continued high prices related to inflation. We need to see inflation come down. The Fed will likely continue to raise rates at 25 basis points until we see some real defining moment. And it may come through a banking crisis again, or it may come through some real estate crisis. But understand that consumers are not engaging. Consumers make up 60 to 70% of global GDP. So without consumers, we can't really have a massive rally. Okay? We just will not see a big, strong rally in the market. We could see some revaluation trends. We could see some bouncing in different sectors. In other words, 10, 15, 20% in various sectors. But with no consumer participation in the economy, things will continue to stagnate and base. And I believe that's what's taking place over the next 6 to 12 plus months. So until we get this real basing move, we're not going to see any real growth. It's a good time to be a trader. It's really a tough time to be an investor right now. If you don't know what you're doing, you can get chewed up. Gold, on the other hand, is moving into an early appreciation cycle phase. I talked about this many months back when we were back over in this area, how we were in a depreciation cycle. We had based and bottom. Now we're in an early stage appreciation cycle. This is very, very good for gold. This is early stage accumulation and appreciation. We don't get into real price appreciation till right over here. This was COVID, and this was the price appreciation after COVID. This was the depreciation or devaluation that we've gone through over the last year and a half, 2 years. Now we're starting to get a good basing, bottoming, accumulation phase in gold. This is really good to support an upward trending bias in gold, and I believe that's going to continue as foreign investors and foreign consumers as well as U.S. consumers continue to accumulate. This is a big mode, folks. This is bigger than any of these previous events, even bigger than 2008, 9, 10, 11. We are now at a point where precious metals are going to be acting as the safe haven for the unwinding of global central bank potential chaos. So this should just continue to grow and base. Now, it may still take, 2, 3, 5 years before we get this real big expansion phase. But once we get above 50, 55, we're looking at a pretty big expansion phase, like right over here. Here's 50, right across this level. And once we get up above 50, then we get into that real big expansion phase. Right now, we're in very early stage accumulation. Okay, the fear index chart moved back downward. We're at 7.15. We're just above my upper threshold here. This is a good, strong move away from fear, upward trending. This is the S&P 500. This means that we still have moderately high levels of fear, which is going to drive a bullish bias in gold and silver and precious metals. We have the custom sentiment index moving a bit higher. As I mentioned to you, we're probably going to roll over at some point over the next 2 or 3 weeks. This may cause fear to elevate again. That will cause metals to elevate again. As fear increases, the drive for precious metals continues to elevate. And again, Bitcoin may elevate as well as this fear factor moves. In fact, I'm going to have to pull up a Bitcoin chart and try to correlate it to how Bitcoin moves with the NASDAQ and with metals, because I believe Bitcoin is instead of an alternate currency, it is an alternate hedge. Again, though, we're looking at some complacency here. We need to see the SPY move above this 410, 411 level, get up above this high here, and that would likely come with a bit of a downward move here in the fear cycle and possibly a bit more of an upward trend here in the sentiment index. Still, metals are bullish biased, and let me explain to you why. So this is a new metals standard deviation channel. This is something brand new. I just created it. I was looking for a way to try to gauge the actual momentum of the trend. And so now we've gone back 2013, 14, 15. This was after the big peak in 2011, 12. You can see how we based. We came down here in 15, 16. This was our real base. We rallied back up. We rebottomed here. That's a perfect, almost double bottom. Then you see the COVID collapse right here, how it just disrupted real supply, took us way down here to these lows, rallied back up to these upper channels, and now we've been consolidating through these downward channels up into this area. We have yet to break this standard deviation channel, which is really key, ladies and gentlemen. We are not going to see metals really start to perform until we get above this upper channel and move into an upper deviation channel. I'm going to add that as we break. Once we break this area with a strong close, then I'll search for an upper standard deviation channel and start monitoring the upward trending that takes place. This is the custom metals index below that shows us, again, gold has yet to actually break out to new highs on my custom metals index, just like we're seeing back over here, although this is a more pronounced downward cycle. It provides a very solid base level for a potential breakout. If we fail at this level here, gold will roll back over, just like I was proposing back over here. So understand that gold is nearing a point of pullback. So we are nearing this area here. If we fail to get much higher here, we will move into this pullback period very quickly, possibly within 3, 4, 5, 6 weeks. So now this chart down here shows us again that if we fail to get above this level with any real conviction, or even if we do, we could get a scouting party pattern, get up above this level slightly, and then pull back down into this area. So you are very likely nearing a peak in gold that may only be 4 to 6 weeks away before we get some sort of a major pullback. Now that pullback will not be disastrous. It'll be an opportunity for you to accumulate more. But understand that gold, in my opinion, will not enter a real large price expansion phase until we get past this 45.50 area up here on this gold cycle index chart. So remember, we got to get up into this area here to see real price expansion. And we're not seeing that yet. We're down in the 39.40 area, which again is back down in this area. Notice how we got up in this area and then stalled and then rallied. Again, this 39.40 area runs into its typical resistance. So we could get up into 44.45 and still not consider it very strong. But once we get above that 45.50 area, like here or here, now we get into some real strength. And I'll probably add a horizontal line across here because it's very important that you understand that the breakout range is really a close above that 45.46 area. Then we get into some real solid trending. Okay? So the custom metals trend index has moved to new all-time highs. It's very key to understand that we're very close to my target. My target here at 13,400, 13,500 to 13,800 roughly on my custom metals trend index. Right in this area, we're literally 400 or 500 points away. And that could be, you know, this is a weekly chart, so that could be a week or 2 weeks away if gold moves another. In fact, let's come back over here. And hypothetically, if gold moves another $80 higher, 75 to $80 higher, we are very likely nearing the end of the move. So this is 88.4 right up into this area. So understand that if gold moves another 65 to, let's say, $75 higher from where it is, it's currently at 26, so basically above 2100, you are nearing the peak. You are nearing the top value. It's going to start likely to roll over. It may go to a little higher, 2140, 2150 maybe, but you are nearing the peak. We are very close to this rollover period, which should last until possibly June, July, August, September, down in this area. This is going to be a great opportunity to look for opportunity to get back into metals, looking for this next phase higher. Okay? But again, we're very, very close to the peak. So I'll try to draw on this another line here, but when we get to this level right here, ladies and gentlemen, we will have extended a perfect 100% move, like I keep telling you, right up to this level. It's going to be roughly 13,400 to 13,600. Soon as we get to that level, that's going to exhaust this move, in my opinion, and we're going to roll over and consolidate for possibly 3-4 months before we get a real solid upward trend. Okay, and then lastly, we have the custom metals trend index, which you can see is moving consolidatedly into the yellow brick road area. Very strong move in metals. Remember, we'll likely probably get back up into this 480 area, maybe tag this previous top in the custom metal trend index, and then roll over. Now, will the rollover be substantial? It could be. I mean, I'm expecting maybe a 200 to 250, about a 10% drop, maybe 12% drop in gold. But it's going to catch a lot of people by surprise because, remember, the biasing trend is still bullish. All of the indicators indicate that gold is moving into a multi-generational blow-off peak, probably somewhere near 2029 to 2033. The peak will happen, but understand this is very, very similar to 2003, 4, 5, where we're going to see some extended basing and bottoming in the U.S. and global markets, trying to unwind concerns, moving into a bit of a bullish phase in 2024 and 2025 and 26. and that's going to continue to weaken a little bit the biasing trend in metals. But the real trend here is that we need to be prepared for what's coming in 2028, 29, 30, and 31. And that is a very long-term bias to the upside. So point these out, that this is going to cycle back up. I've drawn this hook, and it may not be correct. It may be actually more towards 2026, 27, 28. But this move in metals, like back over here and back over here, is going to be very similar. It's just coming. We're moving into this cycle phase now, and the real appreciation takes place above 45 on this chart. That's where we get the real big move in metals. And again, when we take a look at this, oops, wrong direction. Wrong direction. Here, when we get to the new standard deviation channel, this is very interesting, folks. This is very similar to kind of like my volatility index for metals. I have a volatility index for the stock market. This is now like my volatility index for metals. Once we break into this new upper channel with some real trending, then we're going to start measuring the parabolic move to the upside. Okay, we're not there yet. We're still in this consolidation trend. I believe we're going to move up slightly above this level, try to tag a peak, and then roll back down into June, July, August of this year, 2023, before we move into some bias trending, upward bias trending near the end of 2023. That's where we're going to start to see some real opportunity in metals. So remember, June, July, August, September of 2023 should be a very good opportunity to try to load up for the next big phase in metals. What I'm trying to warn you is that I believe this move is nearly over. This current move got about another $60 or $75 to the upside in gold, and it is likely going to stall and pull back until July, August, September, somewhere around that time frame. Okay, guys, now remember, I'm trying to keep you aware of what's going on. We still need to hedge in metals. We still need to be prepared because the accumulation bias is still there. That's what this is telling us right here. The accumulation bias is still in place. We want to be able to hold this through the accumulation phase and not worry about it. It's going to act as a proper hedge. If metals only perform at hypothetically, negative 3 or 4% to positive 4, 5, 6%, while we're properly hedged and trading, it still gives us the opportunity to be in position in case of a catalyst, some sort of a crisis event. And remember, the crisis event that took place in 2020 was COVID. So here's your crisis unfolding where metals fell sharply. You want to remember that if you're smart, when a crisis event unfolds, it normally expands out into a broad price expansion phase. So if we see some sort of crisis event over the next 2 or 3 years, remember, don't freak out about your metals. Your metals are your best hedge in a crisis event, because normally within 4 to 6 months of the crisis event, metals may skyrocket 30, 40% or higher. And if it's a broad crisis event, it could start something that lasts for 2 or 3 or 4 years. Okay, guys, follow my research. Remember, come to MENT.com, share it with your friends, tell people what I do, sign up for the Expert Growth 60-day trial, and let me show you how my research can help you prepare and grow and protect your account through these crazy market trends. Thanks again, guys. Talk to you soon.